Most traders lose money not because of bad indicators, but because they don't understand market structure. If you can't read price like a book, you are gambling. In this tutorial, I will show you how pro traders break down market structure the way banks and institution companies traders do. First, if you're a beginner, what is a market structure? A market structure is our skeleton. It's our skeleton of price. It's how price moves over time in waves, creating higher price and lower price. There are three types of market structure that you need to know in 2025, 2026, 2020, 2020, 2030, 2000. There are three types of market structure that you must know. We have a buying market structure where the price is making high price, high price, high price. Let's actually examine that. This is the first market structure that we call an uptrend. Some of us, we've already know that we need to mark a 1, a 2, a 3. On number 3, we're buying, but this is an uptrend. But how to use an uptrend? Uptrend is simple. If you see high price, you see lower price, and a high price is broken, the market is trending up. Creates a high price, goes back to have a lower price. The market is continuing its direction, going up. That's what? An uptrend. A downtrend is the opposite of what's happening there. Now, a downtrend is like this. You have a lower price, has a high price above, breaks the previous lower price. This lower price, you can see the candlestick moving all the way down here and coming back here. This forms our what? Our downtrend. Now we know the market is downtrending. Then there is where the market is ranging, going sideways, moving like this, sideways. And below we have a lower price. Above we have a higher price. Now, what is a high price? What is a lower price? I want you to understand something. Each and every candlestick that you see on the graph or chart, it's in this way. Has an open price, has four key things that are important. Open price, close price, and lower price. Open price, close price, this is one of a sell candlestick. Lower price is below here. And high price is above here. Now, the open price and close price shows the range. Shows what? Shows the range. And it's important to understand the range because that's what we use in terms of confirming an entry. Right, now we are learning about the logic of the market, the skeleton, how the market structure is actually, how it moves so that you can be able to trade it using the market structure. Now, we have high price. High price, this is where we mark our zones, where we mark our chart, our where the indicators they actually analyze, where we draw tools for trend lines and all that. But I want you to understand that we have key zones that we use in the market structure. Since now you do understand the basics of a candlestick, a buy candlestick has an open price below here, close price above, high price above, forget about this, high price above, and lower price below. Simple. This is a candlestick of a buy. Now, I want you to understand something when it comes to the structure, how we mark it. This is the ranging market, moving sideways. Right. This is a stage where the market is moving sideways, indecision, and accumulating orders. Right. I want you to understand something when it comes to the market structure, so that you can actually trade it, apply any strategy, apply any context, apply anything that you like to apply. When you look in terms of ICT is focusing on the key zones. These are your swing points: swing high, swing low, swing high, swing low, swing high, swing low. These are your key zones. You can actually mark these key zones so that you can be able to see the resistance, see supply, see chart pattern, use indicators to know that in smaller time frame you should be looking to make a sell. All right, let's look for the one of downtrending. Downtrending is the opposite of the uptrending market. I want you to understand it's the opposite of the downtrending market. Lower price, swing low, swing high, swing low, swing high. But then we have the LL, this is lower low. So just to keep it simple, basic, just take it as lower price, lower price, lower price. How is it lower price? It's lower price because if the candlestick, remember, they have a lower price below, they have a high price above. So when they make a turn here and move all the way down, then that marks our higher price. That's how we mark the market structure. It's simple. So I trust you understand by now. You can open your MetaTrader 5 just to keep it simple and basic and practical. Go to chart first. Before you go to chart, you select an asset that you like to trade. In this case, if let's say you like to trade the euro versus the Swiss francs, and then you go to chart. Now context is important. You tap here, you'll be able to see time frame. If you're using an iPhone, you see the time frame here. And once you see the time frame, I want to explain something with the time frame because it's important to understand the context of the market, how we trade it. When you tap here, the time frame here is to see direction where we are going and mark the structure, the market structure in the correct way. Is that please, you mark it from the higher time frame to the lower time frame. You mark it from what? From the MN to H1. This is where you end, right? You from MN to H1. Now you find direction here. You see the structure. Let's do that. MN. Our chart is not loaded yet, but then I wanted us to actually look at. Let's look at another chart because this one is taking forever. It's taking forever to load. Let's go to XAUUSD. This one is already loaded. Tap on this one. Go to chart. MN time frame. Now, when we look at high time frame, this is MN. We do not see anything. So what we do in this case, we move to a weekly time frame. Now, a weekly time frame, we zoom out. We have our indicator. Let's remove that before we add it back. Now, we want to what? We want to see whether the market is trending up or down. What we see here, we see lower price, higher price here, lower price, breaks this higher price. Now we know the market is trending up. High price, lower price breaks, higher price, lower price, high price, lower price, high price, lower price. The market now is ranging, but it was what? It was trending up here. So if you find that we are trending up here, whatever that you do in 4 hours daily time frame, you're looking to make a buy. So here is ranging. So the market is what? Is ranging here. We go to a daily time frame because it's ranging. So now on daily time frame, what do? We look at the highest price where the market moved. Higher, low, high, low. The market is ranging here. The market is ranging high, lower price, high, lower price, high, lower price. There is no break. So we know the market is in a range direction. So whatever that we do here, we get in here with our zone, we get out here with our zone. This is a zone of resistance, and this is a zone of support. We had a zone here. This zone was one of a supply because it had an engulfing candlestick. So that's how we know this is a supply zone. We can also use the indicators. We can add indicators such as moving average, can add moving average or Ichimoku. This is the one that I also recommend, Ichimoku. And moving average is much simpler. When we add save, we go back. Now, whatever that we do, we can use the indicator. The indicator will tell us that we are buying or selling. But then we have to look at the market structure first before we use indicators. The market structure is telling us that here we are selling. So when we are selling here, we want to use the indicators here in smaller time frame to confirm the entry. We don't want to depend on it on higher time frame because we want to mark the market's real structure, not just the structure of using the indicators. We want to use the real structure so that we understand how we analyze from the higher time frame to a lower time frame to confirm the entry. It's simple and straightforward. So let's go to a smaller time frame to understand how we mark this area. Now, this is where we want to make a sell. We go to let's add a feature here, a vertical line, and this is the day that we want to trade here. Let's go to H4 and go to H1. Now we want to sell here. We can combine the patterns like M's patterns. This is an M pattern. You can see we can also use the resistant area here to actually get those sells. We can also apply the ACT, SMC, order blocks, fair value cap, break blockers. We can add those just to actually get an entry, change of character, and we can just use that to actually add here. But if we go to a 15 minute, right, this is a time frame that I really recommend. You can actually make a sell using the candlestick pattern. But this candlestick pattern that you're looking for engulfing pattern. So in this case, if right now we want to buy or sell here, we go to a 5 minute, because on 15 minute we did not see any engulfing pattern, and on 5 minute we don't see any engulfing pattern. However, if we go to 15 minute, you can see that we can mix the indicator to confirm the selling entry. So let's make that example here using this structure here. All right, we had a lower price here that was broken, and we have this candlestick 1 2 3 engulfing candlestick. This is our morning star, right, forming our candlestick pattern to confirm whether we're buying or selling. So it's simple, but going to a smaller time frame, not using the skeleton like this and selling with this using the skeleton. We have to use a smaller time frame. I trust you understand. So don't mark every small wave that you see in smaller time frame. Use the market context using from high time frame to a smaller time frame. Do not use the structure without context. Don't force the trend in ranging market. Please zoom out to understand the full picture. Zoom out to understand the full picture in high time frame. I trust you understand. So mastering market structure means that you can trade any asset, any financial asset, any time frame, without relying on indicators, because I don't want you to actually be relying on these indicators to confirm an entry. Because once you understand market structure, you will know that it's the language of price action. Now you can be able to speak it, you can be able to read it, you can be able to understand. So make sure that you comment, I now see the market clearly without any difficulties. So I trust you'll be able to trade in this way. So to share my experience with you, when you market structure, this is your lower price, right? This is your high price, right? You move all the way down, you make a break here, right? And this break now forms your break and retest. But you also see that we're trending down. You can also add the lines, but just to purely focus on price action or market structure, looking at the candlestick, how they moved, the connected and reacted over time, clicking over time, you can now take the sell using the smaller time frame. Using the smaller time frame, exit will be here at the next low, and if it breaks again, you're looking to take an entry again. So let's make another example using our chart here. The market here is ranging. Why is ranging? Here we have a high price, here we have a lower price, here we have a higher price again. It did not break this high price here. It created another high price again, did not break it, created a lower price, created another high price. The market is ranging here. So you can trade in a ranging market, but when you trade in a ranging market, you can mark the zones here like this, using your resistant lines, horizontal lines. You can mark them like this. You know that here you get an entry, here you get an entry of a buy or sell. Here you get a sell entry, here you get a buy entry. Sell entry, buy entry. You can also expect to take a sell entry here because it's a high price, and exit is at the lowest price. And once you have this, you'll be able to know that, all right, from here to here, how much will I profit? So make sure that you also practice risk management. When you go to H1, H4 time frame, you know that from this entry, since right now gold is actually on a buy, we are making the buy here. From this entry, let's zoom in. From this entry, if we tap on TP, our exit is here. It's here. Our exit is here. So you can see that we're profiting $20. So it's important to also manage the risk, because here, if we're risking $3, you can see that is how much money we are risking compared to the balance that we have. So it's much better to trade in this way. We know that, okay, we're taking this risk and we are waiting to take that profit. So you will know how to count from this, the points. Remember, we have points, we have pips. So if you're looking to actually understand the points, we have another tutorial on our channel. Please make sure that you go to YouTube, subscribe to Pause the Trader, click on this link to open a trading account. We have trade broadcasts that I recommend, and also you can join us on our WhatsApp group and make sure that you're following the correct account of Boss the Trader on TikTok. I love you all, and we have Facebook, we have Instagram. Follow us there so that you can actually get more updates, stay updated, and never miss anything that we post on our group. Now, this is your market structure. It's your market structure. You can be able to trade it. You can apply many strategies in SMC, but understand that the candlestick is what is really focused on the SMC or ICT. If you are actually someone who'd like to use the SMC or ICT to trade the financial market. So if right now we end with this last example, the one of the market is ranging, you're buying here, you exit here, and you can see once the market breaks the lower price here, you know that if it retests, you get in with a sell. But context is important. You can see this is H1. So if you're trading in H1, you're trading within the day, you are day trading, intraday trading, and also scalping, depending on how long you hold the trade, and also the structure that we have. Is it in 1 minute, on 1 hour, or 15 minutes, or 30 minutes? So I trust you understand how to actually mark your market structure, how to trade using market structure. So if you like to ask any question, please leave it on the comment section below. I'll be happy to assist you to understand market structure in much better way. We have a mentorship program that you can join to trade the financial market, and trade the financial market with the mindset that understands that you need to have experience. You need to understand logic, the context, and also gain experience. So I trust you understand how to mark your structure, and now you understand you can apply the indicators using the market structure. Please stay blessed. I love you all. I wish you all the best on your journey to make money trading Forex. For those who like to join my community, we have a WhatsApp group. Make sure that you join it. Stay blessed. I love you all.